So, hello, and a massive hello to everybody. How's everybody doing? Sound okay? Testing, testing. Okay, good stuff, good stuff. Hey, Liam, Alpino, how's it going? So, 14th of April, 2021, no trade calls, no recommendations. Everybody responsible for their own stuff. We're here for educational purpose only, and let's do this, right? So, again, as usual, the what we said is we're going to try and do these every month, once every month, free session, paying it forward. So there's no real agenda or nothing specific I want to cover. I'm just here to give you 30 minutes or so of my time. So if anybody has any questions, trading, life, charts, whatever, don't hesitate to ask, and I'll try and cover as many as I can. And let's do this. Hey, how's it going? So good to see. Good to see a lot of familiar faces in here, and let's get cracking again. Nothing's off. Nothing's off. Okay. Yeah, I mean here what we're looking at is what I had up is the SPY chart, right? So basically, this also stems for. I had a question the other day. Somebody asked me, what is the best way to get a feel for when something is extended to the upside or the downside, right? What would you use, right? And I said, there are a lot of things you can, it depends if you're looking at it on a specific day, week, bigger picture or not. And there are a lot of things people will look at, right? It could be something like pivots. You could look at ATR. You can look at Bollinger Bands. You can look at whatever you want. Bottom line is I'm not a huge fan of looking at things that way per se, because, what is so-called overbought gets overboughter, and what is so-called oversold gets oversolder, right? So I don't think it's very easy to get a feel for something being extended, but what are you going to do with that, right? It's important to have information that is actionable, right? Because even here, if you're looking at SPY, actually, I did this today. Let's slap a Bollinger Band here. Most people would argue that here on the gap up, closed above the Bollinger Band, it's overextended. Sure. But, it can stay overextended for a while. Now, yesterday we're working on 14 greens in a row. I think that's never happened. 13 had never happened for the SPY, but can we get 15, 16, 17? Sure. Records are made to be broken. So you can get a feel for if something is extended or not, but you need to overlay it with something else to give you some kind of edge, or to give you some kind of a trigger, right? If you're looking for a trade, right? Sure. Yeah, keep in mind that we've still got Powell speaking today, so we could, we'll have to see what comes out of that. You'd expect him to say the same things he's been saying. Why would he say anything different, right? They're going to be there, support the economy, especially in light of the J&J news, not even thinking of raising rates, et cetera, et cetera. So, sure. Yeah, my tweet today. Yeah, exactly. Well, the tweet is saying that intraday today, the most interesting dynamic is to me, what's going on DXY and what's going on the euro, right? What does that mean? Well, basically, it means that it's giving you a feel for what to look for, right? So assuming here, right, DXY is stuck. It's not really going anywhere. It hasn't been going anywhere since August, right? And if you think about it, what the Fed's going to do, Fed balance sheet, et cetera, et cetera, et cetera, you would be hard pressed to think that you're going to get a very strong dollar scenario, right? As we've discussed in the past, strong dollar breaks the world. But here we're just trading inside a range. Now, clearly, if you get a VAR shock, if you see a little bit of risk off, the dollar can firm up. But it's hard to see why it should really hold a sustained bid. So here, what we like to look at, what we're saying is, as we're coming back to the bottom of this channel, whether you're long or short, right? The way we look at this, the healthy move would be to see some kind of a bounce, right? Now, whether that is a bounce in the context of this rotation higher back into the 94.50s, right? Or whether that is a bounce for a break back lower, nobody knows because nobody has a crystal ball, right? Could be setting up some kind of topping pattern here. But why this is interesting is because, if you tend to look at the way the market tends to behave the majority of the time, etc., which is not moving in a straight line, here you would assume that both the longs and the shorts would make the same assessment. And the same assessment is that, the healthy move would be to see a little bit of a bounce and then decision time for which way we're going to break, right? And of course, that would have all kinds of implication on bonds, stocks, other pairs, etc. So clearly, this is not a place where we would be looking to get aggressively short the dollar. If anything, we'd be taking profits on some of those shorts or looking for tactical longs, right? And as you know, DXY, especially as expressed this way, is mainly euro, right? So if you go back and you look at the euro, if you remember here, we mentioned this a while back when we started to do these at the beginning of the year, right? We talked about this big, at the beginning of the year, this reversal candle on the monthly, right? If you remember, we said this reversal candle on the monthly, our base case was that we're going to go back into the 120 and then through the 120 inside 117, 115 range, right? And that's the important breakout zone to hold that rotation back through, into 125s and higher we'd been discussing. So far, the market has been fairly technical, right? Because we came right back in, put in a positive close of the 1700, and bam, I've been talking about this on Twitter too, that hold we kept on saying 120 attracts. So now we've made it all the way back into the 120. So this is a similar situation to what we discussed on the dollar, right? Whether you're a structural bull for 125, 130, or whether you're bearish, this is a good place for it to stall, right? And then either correct lower or just make a little bit of a correction to then go back higher, right? And so this is probably the most interesting location on the day, right? And again, if you see stocks pulling down a little bit, coming down a little bit, but it's tricky also in the context here because all things being equal, we are still in, as we discussed in the past sessions here, we're in April, strong seasonals, right? We're going into April, OPEX, traditionally strong expiration cycle. We're going into earnings. The banks came out, the super results, most likely. Tech is also going to do the same. So it doesn't mean that this has to stall or reverse necessarily today, but it's more of a zone to keep in mind, and it would make sense to see these things peak, to see risk peak in the coming days a little bit, and then a little bit of a pullback. That's all, right? That's all we're looking for. Okay. Yeah, I mean, on crude, again, as we'll be discussing, there's very little reason to be extremely bearish on crude, right? What can't go down must go sideways or up. But here, we were looking for this move back into the 60, and we've been trading this a lot around the 60 mark. But you can see since the first puke here, it's just a whole series of higher lows. And every time it looked like it was going to go down, the buyers stepped in. So this break here, especially if we close today back above the 62.30s, everything is indicating that it wants to make another run back into these highs, right? Very, very choppy zone. So, we're still in a situation where, as we discussed, there's very little reason to have any kind of fear or to think that, you need to sell everything, risk off, the world's going to end. Would it be healthy to see some kind of a correction? Sure, but is that likely just going to be some kind of a corrective move in an uptrend in a environment where risk stays bid, unless you get a crazy headline, sure, right? Now we got VIX trading around 16. Would I be surprised if it stays choppy in the range? Absolutely not. Most likely, I'd probably expect it to hit 20 before it hits 10. But we'll have to see. Bottom line, it's a fairly boring ranges, right? Especially for people who want to fade, right? It's fairly boring ranges. I mean, if it were for me, I don't even see the need to do like today to do an update, because to me, nothing much is going on, right? In the broader scheme of things. But, we said we'll do it every month, so we're doing it every month. But so in case anybody has any questions, don't hesitate to ask. But I think here what we're seeing is we're seeing this low vol period going into OPEX, going into the tech earnings, which should open up, right? Which hopefully should open up for some more two-sided action, for vol to pick up a little bit and more trading action. So I fully expect the last 2 weeks of April to be far more interesting than the first 2 weeks, with a lot more opportunity, sure. Yeah, and there's no point fading these rips or slow grind higher. The same way as a slow grind higher, slow grind lower. There's very little edge trying to be stubborn and fading those, right? It usually ends in tears. Yeah, what you're seeing today is you're just see what we're just seeing, continued kind of rotation, right? And as we've discussed in the past, this kind of rotation when nothing's going on in between the indices is usually very, very bullish, right? Is bullish for the market. And here, it shouldn't be surprising. Tech's being bid hard, and today, fast money's probably moving out of tech and moving into, YM, into bank stocks, which came out with record earnings, right? So not surprising. There's nothing really to write home about. We're just still seeing these rotations, and underlying, there's still appetite for risk, and it's going to continue until it continues, right? It's just the musical chairs, right? There's nothing really scary happening. Will the Coinbase IPO have an effect on Bitcoin the same way the futures opening did? I don't think so, but if anything, I'd be more interested maybe in in seeing how we trade when the micro futures start, right? The micro futures, I don't know if anybody wants to correct me, but start, I believe, beginning of May, I think. So I think, to me personally, in terms of famous last words, but seeing what happens once the micro futures are launched is more interesting than the Coinbase IPO today. But we'll have to wait and see. No, it hasn't opened. As far as I can see, it hasn't. Usually it's announced later on in the afternoon. So, but again, also in Bitcoin, would it be good to see this pull back a little bit? Sure. But, as long as something crazy doesn't happen, or you don't see any crazy liquidations, you're likely still going to see a lot of institutional bids supporting, right? But I think it'll be very, very interesting also to see when the micros open. Yeah. Any chart, anything anybody's looking at, any trade anybody's managing, they want to have a second opinion on or want to discuss? Yeah, here at NASDAQ today, we talked about, in the webinar this morning, we talked about an aggressive short here, just tactical trade, which, as I said, makes sense. A little bit of rotation out of the NASDAQ and fast money going into YM, right? And also just the failure to hold that 14,000 psychological level, right? So whether you're looking at this on a, see how We hovered just above, so you probably see a lot of levered retail or something trying to get short here, and with tight stops about here, and you know there's high odds they're going to jack it up into the open, right? So once you see them jacking this up and it loses the 14,000, right? You've still got a run around, cool. It's fairly high odds with this kind of action that price comes back down and clears the opposite side of the overnight range, right? So you see we're kind of stuck, and you're probably getting weak players lining up stops at either sides here to the upside. And here we clear the upside, you get no traction, then we need to clear the downside. And you can see it here, right? We come right down, we clear the downside stops, and then you see some bids trying to support it, right? Fairly classical action into the open here. Now, as long as we can't get back inside the overnight range, right, then this could, you know, or attempt to get back inside, find sellers, then you can easily have a bigger pullback. You can see the 1 hour, you could see the 4 hour. You had a 4 hour close back below that 1400. So that's really the pivotal level, you know, and at these locations at all-time highs, you know, you can get short a move above and fail to hold above. Usually you've got fairly nice asymmetry, right, to trade to the downside, and it's kind of those trades where you don't expect to get much. You have a fairly high expectations that you can cover your risks, so a 1-to-1 play, and then you cover 1-to-1, and then you hold partial in case you catch some kind of a lottery ticket. You never know, right? So clearly here now the fight is around, you know, the 1400. Now it'll be, as long as we stay above, you'll likely see this continue to drift higher, especially as we go into the tech earnings. People will be buying for the free money overnight ramps. But, you know, if we start putting in, probably the nicest setup could be if, you know, if we get a short here, and then maybe you get a nice little short for a couple of days, tricky into OPEX, and then a chance to, you know, maybe even a bigger pullback and a chance to buy into tech earnings. I mean, who knows? We'll have to see. You know, I'm not a fan of crystal ball predictions, but we'll just let price guide. Okay. Kiwi. Very extended on the day. What's the, well, I mean, NZD USD. What time frame are you trading it? What are you looking for? I mean, here in terms of the bigger picture, you know, after the RBNZ, you know, it looks like here everybody's is trading for, you know, reopening trade, central banks not going crazy, et cetera, et cetera. So, you know, this is likely going to be still linked to risk. They're very messy areas, right? So if you look at it from the weekly, you see how it's still, it looks like you would have expected after this failure, you would have expected to see this get some more traction, and then if it's going higher, reverse from lower, right? So here it's holding that psychological 70 mark. I think we may have talked about it here before. And, you know, you can see it's just right pinned at that level, holding for the RBNZ, and then rips right off it. So clearly, yes, here, is it an important level? Yes, because you can see even on the, oops, not what I want to do, even on the daily, you've got the 50 DMA, the 200 DMA, and this was all an extremely choppy zone. So it's messy. So likely here, you know, if risk stays bid, sky's the limits, all good, buy, Bitcoin starts ripping, everything is ripping, then you'll probably see this continue to go knife through butter, hold, and make new highs, right? Or if you see a little bit of a pullback in risk, you'll likely see this try and top out here, and then it's all back to the 70 mark, right? Now, it's tricky, right? Because I think I've seen a lot of people here with a lot of conviction, either side here, Adam, And to me, I don't think it's a location to have particularly high conviction because we're still in very choppy areas. So if you're on a trade, just stick to your plan and manage it. But I don't think it doesn't look to me like there are any clear slam dunks out there, right? Yeah, and here, if you look at Kiwi or Aussie, it's a very, very similar scenario. Do you see what I mean, Liam? It's exactly the same kind of scenario. You had this basing here. We're back bid, but you could easily argue this is bid. We're going to rip higher. 80 is guaranteed. Get your Christmas list out. And you could easily say, well, not so much. This is choppy, velocity of move inside range, and this is still heavy, and the world's going to end. Right? Yeah, it's exactly the same kind of situation as Kiwi. I mean, I'm joking, but you could probably make a very articulate and good scenario, a case for both scenarios, right? And personally, as I said, my view here is that it's kind of like as clear as mud. Now, clearly, the guys who are calling pedal to the metal long the world, if it goes higher, they're going to say it was obvious. And people are calling for the end of the world. If it pukes, they're going to say it's obvious. But I tend to try and be more down to earth and say here, you can make a case for either side. This is the kind of location I personally don't have huge insights on because I very rarely trade these locations, right? I'm not a huge fan. So if I were long off this level, I'd be taking half off here and seeing if I get lucky on the rip back higher, right? And if I'd been, and again, I don't have a position here, but if I'd been short here, right, I would have taken half off into here, and by now I probably would have either been flat or only have 10% and maybe look for a negative close to put it back on. But it's not a location I think is particularly clear. I think there's been a lot of opportunity to trade this intraday, but I think from the bigger picture view, we're still stuck in broader ranges. And I know this sounds like a boring fart, but keep in mind that all these kind of traditional risk currencies that are stuck inside a sideways range, keep in mind and remember that, April, strong seasonals, strong bullish for risk, et cetera, and that we're also going into OPEX, which is seasonally bullish. We're going into all these tech earnings. So even if risk is bid and these risk currencies are bid, right after April, everything starts to look a lot less interesting, right? Even if you're looking at Euro seasonals, et cetera. So personally, I just find it from a bigger picture, I'm not a huge fan as we're ending the best 6 months of the year, as we're ending OPEX, as we're going to get through earnings and into the weaker seasonals to come in and say, yeah, let me get short the dollar, long Aussie, long Kiwi, long Euro, long everything because we're ripping higher, right? It doesn't mean it can't happen, but yeah, not the trade I would prefer. Does that make sense? Is that helpful? Yeah, Hello? Did I just lose you? Is voice back? Okay, what was the last thing I said? Just talking. So I think here, let me just recap. So it doesn't mean that risk can't go higher here, right? But it's just that, as I was saying, I'm not a huge fan of playing inside these ranges. And I like to work hard and focus on how the market trades the majority of the time, right? So understanding context, understanding seasonal, understanding stats, etc., gives you an understanding of how the market should behave the majority of the time or 80% of the time, whatever you want to call it. Now, that doesn't mean you don't understand that sometimes you're going to be in that 20% of the time scenario, but it just means that I'm far more comfortable. I feel like I have a lot more edge focusing and trading and betting on how the market behaves the majority of the time. So not betting against the stats. So it doesn't mean you can't, right? And you always have to be ready for any scenario and even unforeseen scenarios. But it's right here, as I said, it's not the scenario where I'd want to be uber bullish risk on new positions, right? If I were holding long positions, long risk positions, there's zero reason to get out of them, right? Especially when the market is trading like this, you'd never want to take profits when the market is grinding higher and squeezing this way, right? On risk, you'd much better just trailing your stops because, any new high possible, it could continue for ages. But you have to understand that, you don't want to get to the party when the punch bowl is half empty or people have poured their drinks back in or spat back in or God knows what. That's the bottom line. Okay. Any comments, any questions, anything anybody's looking at, anything anybody wants to discuss? Yeah, so we'll have to see here what happens into Powell. We'll have to see when we see the Coinbase out. But again, I think it's just have to be a little bit cautious here. Yeah, similar on gold, right? There's not a lot is happening. Everybody's getting excited on gold, but not a lot is happening. So we talked about this. You say if the time to get excited, well, it's never a time to get excited. To look at gold was here, right? Higher low. Yes, another aggressive buying with a positive close back above the 1700. And we're still inside the 1700, 1750, 1800 range. So that's your long on gold. Not interested in getting uber bullish on gold here, right? Bigger picture, gold is still in this broader corrective move. And the only way, from a bigger picture, you can really start getting all bulled up is you need to see this comfortably start to trade above, 1850. Here's just a corrective move. And clearly here, 1750, as we've marked it, bullish bull bear line. Daily closes above, we'd expect it to see back into the 1850, 1800. Closes below, we expect it to come and try and take out this area. But you see also here in terms of a new position, we're kind of stuck, right? It's kind of stuck waiting for the next catalyst. We just have to be patient. Okay? Yeah, you have to play the hand you're dealt, right? You have to play the hand you're dealt. You can't do anything about that. Yeah, when we start to get the tech earnings, I always like to look at Netflix. Netflix has a way of kind of giving you a feel of how price is going to react. So that's a really, really important one to keep an eye out for. And we'll just have to see what what we get on the headlines, what's happening, right? No, I would not be in a hurry to get long NASDAQ today. Absolutely not. I mean, not in a hurry to get long any indice today, but yeah, ranges are tradable, right? But it depends. The problem with, you know what the problem is with ranges, especially for newer traders, but in general, yeah, the tighter we stay in sideways ranges, and of course markets can correct sideways, right? But what tends to happen is as the ranges contract and we stay there, especially the scalp, people tend to put on more and more size, right? Because they're trying to get make a living off a tighter and tighter range, right? And usually, especially like here on gold, they're very choppy ranges. So they can be tradable, but if you really look at them, in my opinion, they're more tradable than they seem, right? Because you get a lot of wicks, a lot of choppy action. And the problem is people, whether they like to admit it or not, you always have a tendency to want to get a little bit too big on the tighter ranges to compensate for that tighter ranges. And the problem is sometimes, you end up eating like a bird and pooping like an elephant. And especially if you're not disciplined in not getting out or recognizing the range break, then it's massacre. You see what I mean? And again, there's always a strategy for every kind of market. But the reality is that I feel that the newer traders only focus on whatever strategy is working for a specific kind of market regime or period. They say, see, it's always tradable, it's always tradable, it's always tradable. But the reality is nobody really is really good or trades all the strategies and adapts to every market, right? As a trader, you tend to have your go-to strategies, what you're good at, what fits your count size, your personality, whatever. And then you have to learn that there are just going to be certain market regimes that are not favorable, right? And whereas I have a feel like the Instagram wannabes will always sell you a new strategy to make money in any market, the reality is you have to be able to pace yourself and understand that you will be more active or less market in certain market, depending on the market. And you just have to take your medicine and wait and not start improvising, right? Yeah, Swissy too, but to a certain extent, let me get this chart up. There's nice scalp longs on Swissy, tricky to get nice risk reward on them today. But you see how they're all they've all gone back to exactly where you'd expect them to come, right? Remember, we discussed it in the video updates, right? We're expecting these all to come back into these moving averages, remember? And you see Swissy's back in. Yen is still trying. Euro's back in. Aussie's back in. Sorry, Kiwi's in. Aussie, you see what I mean, right? They're all playing according to what we expected. The problem is they haven't been triggering pure trades, right? But this is a beautiful little place for this to stall. But the problem is it a beautiful long? It would be a much nicer long, kind of, let's say, here-ish or here-ish. Does that make sense to you? Is a little bit crappy here because you've got, where's your stop going to be? Your stop is around here, but on the long, then it has to get through this area, this area. Do you see what I mean? And maybe it's just me, but I just find all the locations kind of suboptimal. So but for example, between getting long Swissy here, I'd much rather get short euro here. I think the location is far superior to get short euro than to get long Swissy. So as always, there's also the best way to try and express a similar dynamic or a similar trade. And I think also a lot of getting better and improving your results is you have to make sure that you find the best way to express those trades, right? So again, we'll have to see, but they're shaping up. They're shaping up. Okay? Good stuff. Okay, guys, we've been going for about 37 minutes. Let's call it a day. It was a pleasure. Thank you so much. It's good seeing you guys. Thank you so much for stopping by. And we'll do it again next month. And let's see what we get. Trade responsibly, and all the best, guys. Talk to you guys soon. Take care. Thank you so much for stopping by. Bye-bye, guys.